Hi guys, welcome to the 7-Man Show with me, your host Sean. Now, today we're going to discuss a couple of things, but we're going to start with the new Workhorse, in my opinion. And it's the symbol CLSK clean sparking. And why do I think it can be the new Workhorse? Well, firstly, Yahoo Finance is wrong with the volume. Yesterday and this morning it was saying 2 million. Now it's 5.5 million. It's actually 9 million, which means it's easy for any hedge fund to come and pick up the entire stock, although they wouldn't need to. They just need to take a large position in there. Secondly, its income has skyrocketed recently, which means that although it was loss making, it's cut its losses by 77%. Top analysts expect it to break even this year and start making a profit next year. It may even beat that and start making a profit this year. However, that isn't even the most exciting thing about it. It has received $1.6 million order from a major retailer. Now, they won't say who it is, but I'm guessing it's Walmart. Why would I guess it's Walmart? Because they've suddenly gone all in on renewable energy, and they're trying to beat likes of Amazon at their own game, and they realise that the way to beat them long term is to cut their energy bills and invest in long term sustainable energy. It's a short term pain, long term gain. Now, as well as that, they have tie-ups with Tesla. Of course, they can't confirm this, but apparently, unofficially, they don't have the contracts with them. Officially, they have charged invoices to Tesla, and we do know that Tesla actually do one or two things with their suppliers. They either find a way to cut them out of the game, or they buy them out. And one of the things that CleanSpark earn a massive amount of money in is their consulting side. They have a huge moat for a company this small. They earn 60% on their consulting side. Now, they deal with the powertrains, they deal with the software, they deal with switchgear. Now, the 1.6 million order was for the switchgear. You can look into that when you're doing your own due diligence. But the software side of it, they earn 90% profit from doing it. Now, you can go through this on your own time. However, I think this is going to be a great company of the future. I think it won't be long until someone comes in and snaps them up. They have only done one reverse split in the past, and the only reason they've done that because they were forced to do it to get promotion to the Nasdaq. Now, they have already announced that they will not do any kind of dilution of their shares. They do not have any need to, unless they're looking to acquire another company. Now, when you look at their finances, you'll see that their cash on hand, can pay off their debt, and that's something we like to see. Now, let's see, 9.8 million, current assets 23, total assets, and total liabilities 4.5 million. They have a lot of cash on hand, 7 million. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now, with Workhorse, a few people have been asking me about going down, about it pulling back. Now, I cannot tell you whether or not you should pick it up. All I can tell you is, have you seen the Benzinger interview with the CFO? Now, the CFO, I'll put it down into a small caps for you. The CFO actually said, I cannot say anything regarding the post office contract. And then whenever he was asked regarding the post office contract, a small smile came to his lips, which made me think he's already been informed about having it. Now, the thing is, aside from that, I think it's a shoo-in. Basically, they're the only electric company doing the last mile. They're best suited for it. I think they're going to get at least some of it. Whether they get all of it. Now, the other side of it, as I said before, even if they don't, they are picking up other contracts. They picked up contracts for 20 trucks, and I know people are saying there's only 20 trucks, but it's still a contract. And these 20 trucks might be a tester, see how they perform, and if they perform well, the same company will make a larger order. That is how the big companies do it. They make sure the trucks perform first of all, and then they make a large order. Now, there is also the contract from the investor. The And we hear the arguments, well, it was an investor, but still the investor's not going to throw good money after good money. And then you have the fact that they're still going after the UK and European market as well. I still think there's room for this. SHLL, I've been looking into it. Post-merger, there's always a pullback. There's a run up and then a pullback. Now you still think there's a future for SHLL. The problem is, if you look at the trend mimics Nkla. So Nkla is pulling down SHLL at the moment. You have Tesla. Now, when you look at Tesla, people are saying how this new material is going to cost them a lot to change it on the Cybertruck. But again, they're not going to throw good money after good money. You know, they can't waste money. There's a reason if they're changing the material. And Elon Musk is no fool. He's transformed that company. He didn't set it up, but he's transformed it. And analyst downgrade has brought it down for a short, from 1534 to 1500 for a short period. Then people realised analysts do this all the time, so they can pick it up cheaply. So wouldn't worry too much about that. Now, I got praised for selling my Tesla stock at 1780 and then buying back at 1400 and 1500. Personally, I've bought back and I won't be selling again, because after I sold, I had so many panic moments. It's not good for your health. Now, it's I just think you have to think to yourself, I am in Neo. I am going to go into Li Auto when it IPOs, because I think they are going to be the closest thing to Tesla. I've been asked about Xpeng. I'm staying away from Xpeng because the legal actions and the fact that they stole IP from Tesla, apparently, and not because they stole it from Tesla, and if they stole it from someone else it would have been alright, but because they are that's the kind of way they want to get forward. Neo have done it on hard work and taken a long route. Xpeng have tried to cut corners, and so Rivian I would have gone into, but again, that Tesla are suing them and apparently it's been justified. I did a video on that. So Rivian, who I would have gone into because of the people they're backed by and because it looked like it could be success, I'm now staying away from as well. So my EV cars for the future are going to be Tesla, Neo, Li Auto. And when Ford come out with their Mustang E, I will go into Ford. Problem is, it's going to be in a couple of years, in a year or two, and Ford, if they don't speed it up, could go bankrupt by then. But I think it's a genius move by Ford to go into the EV market. I think that they missed a trick by not buying out Neo, or at least licensing a deal with them. But they are going the same way. They are taking the Mobileye from Intel, which is what Neo used for the autonomous driving. But you've got to think to yourself, do you want to be number one or number 2, 3, 4. And when you answer that question, that depends on the price of the company. And I understand people saying yes, but Neo's at $12, Ford is $6. Look at the price of the companies compared to Tesla. Look at the market cap. But again, you want to be number one. When you're choosing a company, you want to be number one. You can go for number 2 if you want, but you have to be sure to be number 2. If you're going to go for number 2, you may as well go for the number 1 charging network. Surely, purely because the more cars that are out there, the more charging points you're going to need. That's why I've gone for blink charging and plug power as well, because Nkla won't, if they do decide set it up, won't set it up without plug power. Anyway, I'm sorry to ramble on, and I hope this has been of some use to you. Please let me know in the comments box if you agree with it. If you disagree with it, then we can have a discussion. And it really does help with the YouTube algorithm, commenting and liking. And I'll see you in the next video. Goodbye.